Woo! Awesome trading day today, guys. Super fun stuff. We're going to break down some of the most fun ones. And I think today, I got to start off. I was really surprised. There was this one ticker, and I'll show you exactly how it came up and why I thought they were going to crush it today, and then what actually happened, because it was so crazy. So check this out, right? Boop-a-doop. Look at the pre-market gainers chart, the top gaining stocks, okay? And you just ignore these losers, right? Only look at these top gainers. Just look up pre-market gainers on Google. Go to this website, Stock Market Watch. There was this one company called Arcadia Bioscience, RKDA. They had 2.1 million shares traded before the market opened, and they were up 66% pre-market, which is just insane. Everything else here, low volume, low volume, low volume, low volume, just not interesting. But this one up here, number one on the list, number one in volume, this one was freaking made to be. So let me show you how it worked out today, because it was actually really, really interesting. I'll full screen this one, and we'll just boop out of here. So I go, zoom out. This is a different ticker. What was the freaking ticker? Oh, gosh. RK. The really interesting thing was that I thought this thing was going to go huge, and then I realized that this was actually a pretty sizable market cap stock. So with bigger market caps, you're going to see just a little bit less volatility because there's more float, right? So more float means that RKDA. More float means it's going to be a little bit more difficult to move it, a little bit tougher to get it going, which is really interesting because they actually went out and freaking crushed it. I was actually working on the course today, so I was only trading for about an hour and a half this morning, traded till about 10:10, and looking at this for the rest of the day, and I feel like a total idiot because of that. But like I said, I had to focus on stuff that matters for you guys. So here's what happened. It was so freaking cool. They go down in the morning and they take a slump and they just keep, and I saw this right here. This was a big pivotal point where I was like, are they going to go? Are they going to crush it? This candle right here, if they broke through those moving averages, broke through the VWAP, as you guys know, push through the VWAP means they can absolutely crush it, right? And so the point with that is if they keep going, they're going to crush it, and that's what happened eventually. But they died down after that, and it's a shame too, and I just kind of let them go, didn't watch them for the rest of the day. And then right about 10:10, I finished my other trade, and I got out for the day because I was coming here to make this course for you guys, which is awesome. And that's my focus right now because that's what I'm passionate about. Passionate about this too. Love it. Just need to get everything out there. Really, really need to get past the PDT rule because here's the deal. And this is actually the real reason that I didn't make, they go from $3 to $4. That's like, 33? No, they're up 94% today. That's freaking insane. But that's an easy 40, 50% gain, or 30, 40, 30% gain, 40% gain. Reason I didn't have this trade today, and I can't show it to you because it's on my phone, and like I trade from my phone, and I have my laptop, and then I have my trading setup. My trading setup's upstairs, and I'm not using it just because I'm using my chair, my office chair, to record this course for you guys. Super crazy thing that happens, right, is I traded another stock today, YRIV, and it was my third day trade for the last 5 days. Third day trade, what's that mean? Third day trade means I can't freaking trade any more stocks for like another 3 or 4 or 5 days because of the PDT rule, right? So the PDT rule, your count's under 25 grand. Therefore, you're kind of screwed if you want to keep trading after your third trade because I know if I buy this stock, I'm going to sell it today. It's going to be a day trade. And there's no way I'm holding this overnight. It's way too risky. So unfortunately, like I said, I traded the other stock. I had 0 day trades left, which means I was not able to trade this position, which is a damn shame. So let's look at what happened with it, and then we're going to look at the insane growth that you could have on this trade and absolutely crush it. All right, so here's the point, and I'll do a little snippet for here just so I can show it to you a little bit easier because it makes a whole lot more sense once you're actually in there absolutely crushing it. If I can open up the little toolbar and get it open for you guys. What you want to look for here is a VWAP crossover, right? So the VWAP is just that average price level that comes from very, very basic principles. The principle that you're looking at the average price over the given period of time as it goes and goes and grows and grows and grows. So what I was looking at here is this VWAP, is this red line. And in the morning, when nothing else was happening, and this was my only stock to trade, I was super pumped about it because it was going to be awesome. They were going to break through this VWAP price right here and absolutely crush it. What's a dang shame is that it didn't happen. And right about here at about 9, no, this is about 10, maybe about 9:45 to this is about 10:10 right here. I was actually in that other trade, and we'll get to that other trade in just a minute, which is totally fine. But the point with it is that I was already tied up with my day trade. I only have one day trade left, and I made my day trade on a different stock, so I couldn't come back to the stock and I couldn't trade. It was a shame, man. It's a real shame. I got to find workarounds. Biggest thing is with the PDT rule, you got to have 25K in your account. Once you have 25K, they're totally chill. They let you trade whatever you want. And so that's the principle that we're just kind of had to kind of screw over today. So you see these lines right here. We've got 1, 2, 3 lines. With these 3 lines, these were just historic support and resistance levels based on the daily chart and based on historic consolidation. I can show you where we got those lines in just a moment. But the important part is that you know that these are going to be strong levels that had to be broken through, and once you break through them, you're going to have pretty freaking significant gain. We see right here on this line, it actually had consolidation around the line, and then right here it had consolidation around the line, and so that's kind of the power of those lines, right? So what happens is at 10:10, this thing freaking breaks through the VWAP, and guys, I'm telling you, I'm going to put this in green because this is really important. Let me grab my green. This is huge. This is huge. The instant that they break this red line right here, the instant that they break this VWAP, that's where you want to get in. That's where you want to freaking buy. This VWAP crossover was at about $3, maybe $3.10. This is a 1-minute candle. So this entire movement went from about $3 to $3.40, $3.45 in about... what is that? About 1 minute, right? $3.45 in 1 minute, right? That's over like a 10-15% gain in 1 minute, which is huge. So the goal with this is you have to be fast. You have to be ready for the trade. So for me, that means I have to be on my phone, have the order loaded up, and be ready to pull the trigger immediately when I see it break out right here to get in around 3:10, and then have that immediate 1 minute gain of freaking 10%, which is huge. And then as you let it go and you let it go and you let it go, you really don't know what the high on this is, especially since it's only a VWAP crossover. The other trade I made today, which we'll get to in just a moment, was actually an ABCD setup. So it was an ABCD setup, and we'll look at that in just a moment. You have a very defined upside. So this was just a little bit different because this is based exclusively on a crossover, and it's not based on an initial run-up or an initial setup. It's just a downtrend in the morning, and that morning downtrend led to a breakthrough, led to a breakout, and led to this massive spike at a peak of 455, which is freaking huge. 455 up there. It's really tough to time that. Very difficult to get the peak price you get in the market. But the point here is that you're pretty much, if you're bad and it goes up and up and it goes down, you freak out, and it goes up again, it goes down. Usually you want to wait until about noon. Noon is where you'll see peak prices. 11 o'clock is where you'll see peak prices. This is about 11 o'clock. So I'd probably be selling right around here as it approached new highs, and that price level is about $4.20. Now, let me remind you, you got in this trade at about $3. That means you made about $1.20 for every $3 that you risked. That's like 40% guys. That's insane. And you have to remember that a vast majority of this growth happened in this very early on movement. It happened in about 2 minutes. These 2 candles right here that are green, these 2 candles will represent a vast majority of your profits in only 2 minutes. So that's why you got to be on your ball game, ready to freaking crush it, and you can have extreme levels of growth. Guys, 40%. 40% is huge. S&P 500 goes up on an average 9% every single year over the past, decades and decades and decades. Every year they go up 9%. These guys went up 40% in like a matter of 10 minutes. That's the power of insane growth. That's why this trade was amazing today. And again, that trigger for reference and just for growth was RKDA. Super cool company. They're a bioscience company. Bioscience companies are always super cool for 90 noon trades because these guys release some sort of news report, some sort of pharmaceutical report, and they go out there and they freaking crush it, which is just awesome. What I'm actually going to do now is exit out of here, and I'll show you exactly how I found these long-term support resistance lines, and then I'm going to show you the trade I made today and what went down and how you can use the insights from it to improve your trading. Okay? Sound cool? So here's what we're looking at. You got this overarching long-term chart, and it goes up a whole bunch, in February, March of 2018, and 19. So this is this year. This is a daily candlestick chart. And you're just looking at technical indicators on here. Not a big deal. It's all very simply explained in 9 to noon. These are just moving averages. They're average prices. These bands are just bands. Nothing to worry about. Very simple stuff. It's explained in part 2 of the book. Okay? Now, when you look at the daily chart, I'm looking for areas where the price is at a peak or the price consolidates, and I want to find prices that are close. So I zoomed in a little bit because those past prices were very, very high, and they weren't going to have an impact on today's trading. Versus this price level right here is one I found pretty quickly. You have bottoms here, you have resistance here, you have pretty nice consolidation. That would be our first resistance line. That resistance line obviously didn't get hit today, but you got to chart out everything you can. Same thing right here. You see a massive amount of consolidation right here. That means you got a line right there that's going to be a resistance. And we saw that that was actually turned into a support once the stock broke through the resistance, went up to this new high. It turned into a support for one of the downtrend movements. Same thing right here. These two lines are very close because there was a resistance right here on this top line. Peak right here, consolidation peak right here. And at the same time, there was a pretty sizable support down here, support. So I have both of those in. And as you saw in the daily chart, or in the 1 minute chart, what actually happened was that this stock came to these levels, and the breakout point was this bottom level, and it just kept going through the next one. Early in the morning, you saw these as resistances as the stock just bounced down from them. So they worked, they made it effective, and it had this massive break through it. And again, it was supported here, supported there. It's all based on where your technical analysis is. All right, sound cool? Oh man, I know this camera shakes sometimes. I don't know what's up with it. So that was the background on RKDA and pretty much the basis for the trade. The only other thing was another level, and it was just a boring up price level right here based on the idea that you're seeing consolidation, you're seeing bottoms. So let's move over to the trade we made today, which was awesome. That was YRIV. Now, the thing with YRIV, which was super cool, is that these guys were like a text. Let me zoom out a little bit. Let me see what's going on here. Okay, cool. So with this trade, you're looking at a pre-market gain. These guys came up on the screener basically at the beginning of the day. You saw them come up. They weren't on the pre-market screeners list, but as soon as the market opened, I went over to scan, and there were about 4 stocks here at the beginning of the day. Now there's a bajillion because everybody's doing amazing and has a ton of volume. The point is, the beginning of the day, there were 4 stocks here. Top 2 stocks were RKDA, and then if we go back over here, and I'll see it here, but it was YRIV. So pulled them up, and they had this massive pre-market gain, or early market gain, right? So this huge run up in the morning, and that's what we were focusing on. That was where the trade was in this morning trade. This is went all the way up, and you're looking here for an ABCD setup, right? So you have a big run up, and you want to use that as fuel for growth. So this is the one trade I almost got in. Then I did get in it because it filled, and then I got stopped out because it just kind of teetered away, which is a shame. But what are you going to do? I'll look at one more trade after this I made today. It was super fun. So you have this huge run up, this big A, and then B right here. And what you're looking for is a consolidating C, and then your D, your upside here, is going to be this added on top. So you're having really high upside with a downside risk basically right below that VWAP level, which we talked about. It's that red line at average price, which is super cool. So I get in this trade, and I say, look, if this thing hits 70 cents, and I was a little bit aggressive, so I did like 70, I think it was like, I can check my trade history actually if I want to. I'll pull it up. Yeah, okay, cool. 715. So you get in this trade, 715. It's like right here. This is an aggressive entry point because you want to have your maximum upside. The upside here, of course, being all of this. So you're looking at basically 20 cents on a 70-cent stock. That's about a 20-40% gain right there, which is super cool as your upside on this D. Now, unfortunately, what happened is it reversed. It didn't have the continuation, and bam, I set my stop loss right here. Stop loss got triggered. I got out, and then it's been teetering off for the rest of the day. So that was a good trade to get out of. It's a shame though, but remember, you take this trade 10 times, it's going to continue, it's going to go through, it's going to complete the ABCD setup, and that's where you're going to have that massive level of growth and success with whatever it is you're doing. It's all about continuing, pushing it, and making it happen. So that was the trade today on YRIV. And what's cool with that is, even though that wasn't a good one, I know that if I take that trade 10 times, I'm going to win at least 33%. All you have to do is win 33%. So you have double the upside versus your risk. So if you just keep making that trade over again, all of a sudden what happens is you grow and you grow and you grow, and your account size just keeps going pushed up and up and up because you have the probability in your favor. You become the house. You become the winner. It all stems from this internal ability to go out there and absolutely freaking crush it based on this idea that what you're doing will work a majority of the time. You just keep going and going and going, make massive profits from it. It's super cool. So with that said, we're going to get into the last trade today, and let me check my account again because I want to make sure I'm saying what I'm saying right. It was a while ago because I am working XMD, another one that came up on the screeners in the morning, and gosh, man, it sucks. PDT rule freaking sucks because I know, like, with RKDA, like, that was such an amazing setup and very low risk because those VWAP breakthroughs are just ridiculously consistent. But look, man, I didn't have any day trades left on this trade, which sucks. It's bad. But there's just nothing you can do about it. You just have to keep pushing through and understand that if you just keep making the trades, eventually you get this, eventually grow your account. That's why I'm working too with like the book and with online marketing, is to get to that 25 grand point so that I can make as many trades as I want and freaking get in the goods. But with that said, I want to look at the trade on TXMD today because this should have been a profitable trade. But it wasn't, and it wasn't because of one thing I did that was just ridiculously stupid, and I don't want you guys to make the same mistakes. I've made this mistake so many times, and it's not necessarily a mistake, especially when you're starting out. This is a good thing to do, but once you've been really in the markets for a while, it's important to not do this one thing that you do, and it's good for the long term, and it's supposed to be amazing for you. But I'm going to show you guys exactly what happened. So here's the deal, okay? We'll go over to the computer, and in the morning, we're looking at a big pre-market gain. I know you can't really see it, but just it's pre-market gain. They have this run up in the morning. They kind of have this pendant. They go down from the pendant. But then they have this, they start to go up again. And they had this one candle right here that really got my attention. This was a hammer candle, and I see the same thing I usually see, right? We have an A, a B, a C, and then you're looking for a D, right? An ABCD setup. Very, very basic stuff. So I see that, and I'm like, okay, well, this looks freaking nice. I'm telling you guys, this ABCD setup has made me more money than so much of what I've read online about this crap. So please, I got this in like chapter 23 in the book, and I go into it in so much more depth. It's so valuable. 9 to noon on Amazon. Killer content. I'll change your life. So I look at this height, and I add this height here, and I had a target. I had a target of 31, because this right here, you're looking at basically this right here, which is 285 up to this right here, which is about 308 conservatively. And I did the math on this when I was doing it, but looking at 15, 20, about 20 cents, maybe like 18 cents conservatively. So 310 plus 18 is 328. So 328 is your target on that conservatively with the ABCD setup. And again, that's just based off taking this height and adding that exact same height to the top of the A. And I'm pretty sure I did all that math right. My target was really up here, to be honest, and it didn't hit my target. So I was either too aggressive on this A, or I did my math wrong, but I'm pretty sure I didn't do my math wrong when I was trading, because I used a calculator. You always use calculators when you're trading. Usually I use my phone as a calculator, which is obviously being used right now, so my math is disproportionately given. So you have this breakout right here, and it goes up, and it starts to go up, but then starts to pull back. And dude, I'm telling you, craziest thing happened, right? So originally, my stop loss was, I'll do this in red just because it's a stop loss. My stop loss was right here, right? below the trade. The upside was 18 cents. I wanted a downside of about 6 cents. That sounds about right to me. I was in it about right here. This is like 306. I think my fill was at 308. So I had a stop loss at about $3. Yeah, that's right. So my stop loss is at $3 as I enter the trade here. It goes up, but then it has a retracement. But I wasn't at the retracement. I was only right here. It went up, and I said, all right, cool. It went up. There was this hammer candle. I'm going to increase my stop loss. I increased my stop loss to like 308. I increased it to like right here. And this was my first trade of the day. And what happened was so bonk. And the thing goes down to the exact price level of my stop loss and sells. And then it just goes up for the rest of the day, which is freaking crazy. So the point here, right, is make sure when you're setting these stop losses, that you set them and you don't move them, right? You have a set risk on the trade. You don't have a variable risk, at least at the beginning. If you want to use a trailing stop loss, those are great when a stock just keeps going up and up and up. Like the stocks that are tripling or quadrupling in a day, those are great places to use trailing stop losses. They're going to keep going up and keep increasing. But with a very basic setup, and especially like with the ABCD setup, you want to use that consistent level. You don't want to increase that stop loss, especially not at the beginning when it has to work out. And that's what I did, and I applied that to that other trade. That other trade went south. This trade didn't go south, but I cut it off too early. I cut the other one off at a normal pace. I cut this one off too early, and I cut off my profits on it, right? So you're still looking at that 3-to-1 risk-reward ratio, 2-to-1 risk-reward ratio. You still have massive growth. Only problem is you have to let it work out, and you have to let it grow. And the best way to let it grow is to freaking crush it by allowing your stock to move and just let it play out and give it a little bit more patience and a little bit more faith. That was a problem I struggled with so much when I started trading, was I had a total lack of faith. And so I would have this happen over and over, where I would just keep inching up the stop loss a little bit every time the stock went up. And what happens is when you keep inching up your stop loss, eventually there's a slight pullback. And maybe it's just a 5-minute pullback, maybe it's just a 1-minute pullback, but that pullback can get you out of the trade and get you losing out on your profits if you don't let it keep going. You don't give it time to recover, because those pullbacks are just temporary. You have to push through it and allow it to grow, allow it to happen, allow it to keep on going hard. And as soon as you do that, it's going to fundamentally expand the amount of growth you have. It's going to allow you to go out there and absolutely crush it by focusing on the upside instead of worrying about saving just a little bit on your downside. Because the biggest mistake you can make is to worry about saving or worry about not losing, which sucks because human psychology, we're prone to go against losing more than winning. But you have to get into this state of mind that you're a winner, you deserve, and because of that, you're not worried about losing. You know you're going to win a vast majority of your trades, and you use that mentality to let stuff run, let stuff go. The biggest mistake I used to make, and the biggest mistake a lot of new people make, is they cut their winners too quickly and they let their losers run. So with a stop loss, at least you're cutting your losers, but you're stopping your winners from running. So let them run, let them go, and especially when you have a profit target, like in a trade like this, where my profit target was like basically right where the high was, let that profit target stand alone and give it time to work out. Great examples here, great trades here. If you guys enjoy this, if you got a ton of value from it, I'm super pumped for you. I hope you go out there and apply it, absolutely crush it. Some of these trading patterns are very, very powerful. And by some of them, I mean all of them. They're amazing. Go crush it. If you want to learn more information about this and get a much deeper level of understanding and experience, go click somewhere, link, get a copy of my book, 9 to Noon. Go out there, read it, and destroy your trading, expand your portfolio, build real savings and retirement, some of the best investments possible. I'm telling you guys, this book will change your life, change my life. Stock market's amazing. Go out there, absolutely crush it. Thanks so much. I'll see you in the next one.